What's going on, guys? If you guys watched our introduction video, then you know I covered 3 concepts. I didn't go too much in depth on it, but I wanted to cover order blocks in its entirety. So for order blocks, I tend to look at 3 different types. I'll go over each of those types and how I enter and exit a trade based on those concepts. I do want to plug in that I'm not too deep into the smart money concept. I am an institutional trader, mixed with retail, so the way that I look at order blocks may be different from those who are super deep into the smart money concept. It's more so how I look at the market and how it helped me, and hopefully it benefits somebody else. So let's get into it. An order block is the last bullish candle before price drops down in a downtrend, and the last bearish candle before price pushes up in an uptrend. Different order blocks that I'm going to go over. First, we're going to start with the engulfing order blocks. I do know that in smart money concepts they are called the standard order blocks, but I tend to call them engulfing order blocks because they resemble bullish and bearish engulfing candles. So that's why I call them engulfing order blocks. If you guys have an issue with the name, take it up with the charts, don't take it up with me. In an uptrend, you want to identify bullish engulfing candles, and in a downtrend, you want to identify bearish engulfing candles. Since this example is in a downtrend, we are going to identify bearish engulfing candles. So the expectation is when prices create lower lows and lower highs, within those lows and highs, prices also create order blocks. So when prices continue to drop, we are expecting price to pull back into that order block before continuing on with the trend. In this example, price is in a downtrend, so we are looking for the last bullish candle before the drop down. So here I highlighted the last bullish candle from body to body. Some people include the wicks. I personally do not unless I have reason to do so. Whether you like to mark up your order blocks from body to body or wick to wick, I advise everyone to use alerts so that way they know when price comes into their order block area. What I do when price comes from our order block area is I scale down to a smaller time frame. I look for a break of structure, reversal patterns, or smaller order blocks. Before scaling down to the smaller time frame, since I trade order block to order block, what I like to do is identify order blocks above and below current price. Right here, we have a bullish engulfing, which is also the last bearish candle before the move up. So I'm looking to enter off of here and trade it into here. If you are an aggressive trader, you can enter directly off the order block by setting a limit order or market execution with your stop loss above the high of the last bullish candle. Since I personally don't like to risk as much, I usually just put my stop loss above the 50% if I'm going to sleep before I get into the trade. If I'm awake, then I scale down to the 2-minute time frame and look for a reversal pattern, break of structure, or a smaller order block to trade off of. In the time frame now, because I don't see anything I like once price reaches this area, I'm going to go to the 5-minute time frame. Everyone looks better. I'm going to look for entries off of those areas. On the 5-minute time frame, there's a 5-minute order block that was printed out. So we're gonna wait and see what it does when price hits that area. And it did. Okay, so then once it does that, I'm going to enter here for a short. Here, stop loss above this area here. Then I'm gonna trade it all the way down into the 1-hour order block. So I'm at 30 and then see how this plays out. 1 second. So as you can see, price did hit our 1-hour order block and it seems to be rejecting and wicking off of that area. So that gives me reasons to buy. I do see that the overall trend is bullish. We did have an extensive pullback into that 1-hour order block. The smaller time frame trend was bearish. So I'm looking for a price to go from bearish to bullish. And this 1-hour order block might just have the entry to do so. I'm looking for either a break of structure, reversal pattern, or a smaller order block to enter off of. Same concepts. And I'm looking to trade it up into this 1-hour order block. So let's go down to the 2-minute time frame and see what we can find. Personally, I do like when price creates a double bottom. I'll give it one more candle. See how it closes and rejects. All right. So this gives me my entry here. I'll put my stop loss underneath this order block that created since it is now protected. So that is a 14 pip stop loss for 308 pips. Let's stay on the 2-minute time frame just to show you guys how it normally looks. So price did hit our target area. If you look and notice, all these are bullish engulfing candles and bearish engulfing candles. Those are the order blocks that I tend to trade the most. They are standard order blocks. But there are other order blocks to get into, so let's pull up the next one. I hope I'm not boring y'all. Am I boring y'all? Crickets, cricket, yes, no. Let's go. That rhymed. All right, y'all, so we are now on to our next order block, which I call the 2 candle order block. After this one, we just have one more to go, which is a breaker block, but we'll get there when we get there. Do not get bored. Do not try to, leave my video because I'm not finished yet and I'm not going to make it like super drawn out. Okay, so the reason I call it a 2 candle order block is because the next 2 candles for the push in the opposite direction must engulf the previous candle. As you can see here for this last bearish candle, in order for this to be considered an order block, this candle and this candle needs to engulf this one. And for this bullish candle, you need 2 bearish candles to engulf it for it to be considered an order block, because the push in the opposite direction must have momentum shown. And so that is why it requires 2 candles. I just really like to call them 2 candle order blocks because, they need 2 candles. And I like to call the other ones engulfing order blocks because they're engulfing candles. So besides that, let's get into how these order blocks are used in the market and how you can use them to enter or exit your trade and add them to your trading strategy. Personally, what I like to do when it comes to order blocks like these is draw my 50% fib from wick to wick of that last bearish candle, bullish depending on the trend, but right now we have a bearish candle that we need to draw the fib from. And I like to see what price has in between this level for me to enter off of so it minimizes my risk. So it's not saying that price won't come back into the order block and reject without going up, but that is just something that I'm okay with losing or missing out on. I don't chase a lot of trades if it doesn't meet my criteria. It's not saying that you have to have yours the same as mine, because I might have an instance where I do take the trade if price does come here, creates a double bottom on a smaller time frame and gives me a better entry or something that's really cool looking, then I will take the trade. But personally, like I said, I like to look for anything within that 50% level. So let's go down on a smaller time frame and see what we can find. I do start with a 30 when it comes to order blocks like these. And so here, what I see is somewhat of the same type of order block with these 2 candles engulfing the last bearish candle. So with this one, I will look for entries off of this here with my stop loss below, and that might help me get a better entry. So let's play this out on the 2-minute time frame. And we are looking for price to come right here. So let's see what we can get. So as you can see, price did come down and touch my entry. It also created a double bottom, which is also something that I always look for in a trade. Besides that, if you look closely, you can also see another 2 candle order block, last bearish, 1, 2 bullish. So that's also confirmation, and it did fill in 50%. So that's also a reason to enter here. Stop loss below this wick now, since it's giving us that. Entry here. And there was a 4-hour order block here that we will be looking for price to trade into. Remember, I personally trade order block to order block. So let's go on the 30-minute time frame to see how this plays out. So this is how I trade the 2 candle order block. I hope that helps, and we can move along to the last order block, which is a breaker block. Think of it as a break and retest, because it basically is. These failed order blocks created a breakup structure, and when price breaks structure, what do we expect? A retest. Well, the same applies to breaker blocks. When an order block gets broken, we expect a retest from the opposite end. You can either put your entry or limit order at the wick or body of the last bearish candle in a uptrend or in a downtrend, depending on which way the market is going. So if you look here on these examples, price broke this order block here. What we usually expect when price reaches this order block is for a rejection and a continuation. Because price failed to reject this order block and broke from below, it came back up, stop loss above this last bearish candle, and price continues down. This wick was news, so sometimes I don't even look at that when news applies, because obviously we're not in control of technicals when that happens. Moving on to the next example, same thing, you have the last bearish candle before the push up, price comes back, retests that, does not break that wick, stop loss a little bit above the wick from that last bearish candle, and a continuation down. Same applies for this breaker block right here. Price comes back, rejects within that before breaking this wick over here, which is still good. because it's not higher than that. Stop loss above that, entry right here, and a drop down. Now you can see once price drops so many times, there's an order block here. And reason why price came and dropped, well, because it was a break and retest. It's super similar in retail strategy, so we should be able to grasp that concept pretty easy, especially if you already know the standard order blocks and how to identify those. Just use that when you see market creating similar structure, up and down, break and retest, break and retest. It's usually around these breaker blocks. So I hope this video helped you. If it did, make sure you leave a comment, like this video, subscribe. I've watched so many videos and I've been like snooze fest. Hopefully that wasn't my video. If it was, keep it to yourself. Anyways, thanks you guys for watching the video. Peace out.